Welcome back. Now, the 2024 budget has come and gone, and South Africans can breathe a sigh of relief as the Minister of Finance didn't announce any big tax changes. But this has come at a cost as Treasury tapped into South Africa's gold and foreign exchange contingency reserve account. For this first time in 20 years, this will be used to rein in debt. And joining me now as we assess some of the Finance Minister's moves is Partner for Transfer Pricing and International Tax at PwC, Osman Mollagee, Mazars Senior Manager, Devs Moodley, and Director for Tax at Deloitte Africa, Alex Gwala. Thank you so much for your time, lady and gents. Starting with you, Alex, I moderated a politics panel earlier on, and there was really a tone of that it felt like there was a lot of political hand in the budget. Of course, we know that tax-wise, that affects the voters directly. Did you kind of get that in this budget, considering that there were no major moves, particularly on personal income tax?
Actually, it's the opposite.
Okay.
I feel we were expecting that since the election year, the budget is going to reflect that. So we're expecting that they're going to focus more on the social spending at the expense of infrastructure development. But we saw the opposite. I mean, 900 billion going to the infrastructure development. To me, it indicates that they staying the course in terms of focusing on the infrastructure development,
all right.
which is a good thing. So which was a surprise. I was expecting, honestly,
okay,
they make it be like another election campaign.
Des, do you think that consumers are happy, maybe except for the ones that consume alcohol and tobacco and vapes?
So no, I think the lower middle income bracket is going to get hit, and it's just because you have your bracket creep, your tax bracket hasn't shifted much, which means it hasn't taken into account inflationary increases in salaries. So value of salary is technically worth more, but may push you into a higher tax bracket, which means you pay more tax. So.
Oh dear. Yeah. Okay. Yeah, because I've also been wondering about this tax creep. People haven't really been explaining it. So it means that your income isn't adjusted for inflation, and therefore it moves to a higher tax bracket.
So your income is
adjusted for inflation. Yes.
So your 100 Rand today is worth maybe 110 Rand tomorrow, which could push you into a higher tax bracket. But the tax brackets itself haven't been adjusted for that inflationary increase.
So you mustn't be shocked if you're paying more tax.
Yeah, basically.
Whew, okay, let's hope that I don't get into a higher tax bracket. I see, Osman, that your mic is being fixed there. But let's continue. I mean, just looking at what we got, because a lot of the metrics, the financial metrics, were better. Even the deficit was below 5% and all of that. In terms of the tax revenue, I actually realized that the shortfall was 56.1 billion Rand, which is better than the 56.8 billion that was forecast in the medium-term budget.
That's correct.
Alex, is this a significant improvement, or are we just taking it on the chin?
It's not a significant improvement. It's more or less the same number. 7 billion difference. The issue that we're having here is around the mining sector. Everyone is talking about it. And when the minister spoke about the tax collections last year, he highlighted that the mining sector contributed significantly. But he said they can see the trouble coming, and now we are really experiencing the trouble. I mean, the worst performing industry is the mining sector, simply because of the issues that we face, and obviously the commodity prices, that one we've got no control over. But we've got our own internal challenges that if we had managed them early enough, we wouldn't be where we're at right now.
Yeah, and of course we have seen the pain that the miners are going through right now. A lot of them are coming through with retrenchments that are looming, actually quite concerning there, as we did have unemployment figures coming up and ticking up higher. So you kind of wonder if things are going to get worse, at least in the short to medium term. Osman, welcome back. Or welcome, rather. Just looking at those revenues, what did you make of revenue collection as expected? expected, no surprises, but still quite concerning?
No, I definitely think so. And I just want to kind of comment on the point that Alex and Dev's made, is that just on the personal income tax, I mean, it's one of the things that I refer to as a stealth increase, because it really is the equivalent of a 1% increase in tax. And those are the two ways that Treasury could have played it. Either just come clean and say we're increasing taxes 1%, or just say nothing but not give you that inflationary relief. So, I mean, we're talking about 18 billion being taken away from taxpayers through that. I mean, I know
that's a lot of money.
The aim, I mean, they talk about 15 billion, but it's 18 billion attributable to this, and then we get like fuel levy, we get like 4 billion back, and it comes out to 15 billion. But I think for me that's an important point, and that is to your first question about the politics. We need to be, as government, be seen to be very, well, I don't know if they want to be seen to be populist, but they are being populist. Yes. And they don't want to rock the boat too much. I mean, I think a lot of us probably would have thought that if we needed 15 billion, technically, the best way to get that would have been a 0.5% increase in the VAT rate, but they can't go there in an election year. So that's that. And then to Alex's point, 100% agree. But that you know, it's neither here nor there. It's 700 million compared to what our finance minister said in October. But I think let's just keep in mind that it is 56 billion lower than what was projected last year this time. So in the FY23 budget, when we thought about what we're going to be collecting at this point, we did undershoot by 53 billion. It's just that the minister realized it early enough. Yeah.
Just talk to me about, actually, no, coming to Devs. We're talking about, I mean, Osman says, you know, this could have been a clean thing where you increase VAT or the fuel levy. And actually ahead of this budget, a lot of people had thought that the fuel levy would have been the one to be increased. But was this also another kind of electioneering thing? Because, I mean, we know the pain that, you know, motorists and even businesses have, you know, experienced due to the high oil prices, inflation, and maybe that they're worried about further pain when it comes to, because the minister also did say that in terms of oil prices, that's really uncertain. What did you make of that fuel levy being kept the same again?
Look, it's an election year. We knew going into this budget that it was always going to be difficult for the minister to make any sort of tax changes, no matter what we predicted. I mean, VAT could have increased by 1%. We could have had an increase in your ultra-high net worth bracket from 45 to 50. But that wouldn't have been positive from an election perspective. But what has happened now is that it seems like the ball has now been put into SARS court. And the question is, how is SARS going to collect this revenue? And what we've seen is SARS has slowly been turning the corner in digitally enhancing the requests for information. And specifically in practice with our clients, what we've seen is less generic requests for additional information and more specific, tailored requests as well. So it is on SARS's side at the moment.
Yeah, you saw me writing down. I have Edward Kieswetter on in less than an hour, so I'll definitely be asking him that as well. How hard do you think SARS then will go in terms of beefing up those revenues at this point, and maybe not even directly with taxes, but penalties for people who actually don't submit their tax returns and the like?
Yeah, I mean, Dev touched on the digital transformation. If there's one government department that we honestly need to give credit to, is the revenue authorities. I know they collect taxes from us, so we feel the pain when they collect it. But they're doing a great job. I mean, they're improving in terms of, like you say, the quality of the audits that they do, the dispute matters that they settle. They don't just go for any case, go to court. They research properly. When they take you to court, chances of success for you as a taxpayer are very slim, because they kind of know what they're doing. So they're really doing a great job. And that's going to continue. There's a lot that they're doing in terms of information sharing with other countries. So the ways of getting information has become easier for them. So as they improve more on that, we're going to see them collecting even more taxes. Because you need to widen the tax base. You can't keep working the same people that are already complying. So they're doing a great job.
And I mean, Osman, I mean, you mentioned that one of the biggest headwinds for tax revenues was the mining sector. Of course, we know that besides the logistical issues, there's also the issue of pricing. But I mean, just looking at the other corporates, they were dealing with load shedding and also Transnet issues. Would you say at this point that it's a real worry that tax revenues aren't going to go anywhere as long as there is this backdrop of weak economic growth? And actually, if in this budget there were things that were addressed to address that weak economic growth?
So I think the question of the weak economic growth, I mean, I think there were bits and pieces in the budget, but to your point about where we are at present and what we can expect, I think that is exactly where we are. And to Alex's point about, I think we do need to think about what probably they are thinking about is what the SARS can do better. And I think there are a few things that there are quite a few things they could do better. One thing I was encouraged about, though, in today's announcement is I'm very worried about, the amount of revenue stuck in the dispute process. So when and maybe you can talk to the commission.
Yes, I'm writing down the questions.
So less than, and again, I don't want to get too technical for the tax nerds, but less than 10% of our disputes in this country actually are resolved through going to court or mutual agreement procedure. They actually depend on what we refer to as the ADR, the Alternative Dispute Resolution process, which means that you go through a process of objecting and then you have, settlement discussions, which is fine, and I think that's appropriate. My bigger worry is about how long it takes, because we know that the SARS and our country, we report our revenue on a cash basis. That money needs to be in. It doesn't matter that I've issued you an assessment. That's not cash in the bank for SARS. So from the time of issuing an assessment and now we're fighting in a dispute. So one of the things, the point I wanted to make is that one of the things that I really liked today is that it looks like they want to genuinely shorten that period. Okay. And instead of having these discussions tied up for years and years where you think you're going to collect from the taxpayer, but you don't, rather shorten that period, negotiate better and get the cash in quicker. And one of the things that they announced today was, you can start that ADR process hopefully faster. I mean, it used to be at where we are today, there's an objection and appeal process. You can only go to ADR at appeal, and maybe you can start it. So I'm not going to get into the technicalities of what it means, but the idea of starting the process earlier and hopefully also then concluding it faster as well. So we actually get cash in from the SARS perspective.
All right. Let's talk about that multinationals corporate tax, where there'll now be a rate of at least 15%, where they're hoping to get an additional 8 billion rand. Devs, what did you make of that?
It's interesting to see it come through, but it was something we were expecting for a while. But I'm interested to see how they actually couch the legislation around that. We haven't had sight of anything yet.
Yeah.
Actually, can I? Just this afternoon.
Oh, okay. Well.
On your website, was
okay. So you were paying attention to.
When I was preparing to come and speak
every other thing outside the budget. Alex, I mean, what does this do to the competitive landscape by this tax being implemented?
Look, I mean, for South Africa, that's why the tax is only going to be 8 billion, because South Africa is one of the, from a corporate tax point of view, it's the highest in terms of the tax rate. So if you look at other countries, the tax rate is lower than us. Yeah. So the rules are very complex. I mean, I'm not a specialist in that area. But basically what they're trying to do is to say your effective tax rates across all countries that you operate in must be minimum 15%. So if most of your profits are generated locally, but you've got operations outside, chances are your 27% is going to save you because you're already above. So it will take a while for us to, as a country, to really generate tax revenue out of these new rules. But it's something that is being done by everyone, so we're expected as a global player to also do the same.
Your thoughts on that, Osman?
No, but I think that's exactly the point, because everyone else, I think it's absolutely the appropriate thing for the minister to do, because I don't think it harms our competitiveness. We are in fact I mean, we're not behind. I mean, the rest of the world implemented it now already from the 1st of January 2024. I don't know how we're going to implement it retrospectively from 1 January 24. That's what I mean, I think the point here is that this doesn't affect our competitiveness. In fact, it's a matter of saying that for all of the countries that have low tax rates, and that's where the 15% will apply. If we, as South African multinationals, have subsidiaries or businesses in low tax jurisdictions, that's where the 15% point will apply. But the reason I think it's entirely appropriate is because that 15%, or whatever the number is, so I mean, if you're only paying 10% there at the moment, then there's a 5% that must be. That 5% is up for grabs globally. Someone's going to take it. Okay. And it might as well be us.
All right. Yeah. The finance minister also said that the social relief of distress grant is to be extended and then improved. And those details will be coming out in April. But he said beyond 2025, then we'll need a new revenue source for it. Devs, do we have the muscle at this point to any kind of prospects to get a new revenue source, particularly on the tax side?
I think a tax increase is looming. It's just a question of when it's going to come.
Yeah.
So.
Whew, all right. Well, we have a minute to go. I'll give each of you 20 seconds to rate the budget tax-wise. Just looking at the revenue and expenditure side and also what they've done. Alex, what between 1 and 10, 10 being excellent and 1 being very bad, what are you rating?
7.
A 7. All right.
It was not an election budget, so that's exciting for us. Yeah.
All right. Devs, on your side?
I'm going to go with 5.
Okay.
It was a safe budget.
A safe. Okay, so right in the middle. Yeah. Osman?
Yeah, I'm going to end up somewhere between 5 and 7 as well. I would have given it like a 2. But I think we need to be lenient because it's an election year, so we kind of like need to expect.
Yeah. Okay. Expected.
Yeah, indeed.
You were going to say?
No. I think we need. It was expected that in an election year that we're going to have these kind of levers being pulled. I think if it. We could have been harsher if it wasn't an election.
All right. Well, thank you so much for your time, gents and lady. Really appreciate you coming into studio and giving us those insights on the tax movements that we saw coming out of the budget. That was my panel of experts, which included Devs Moodley from Mazars, Alex Gwala from Deloitte Africa, and PwC's Osman Mollagee.